They told you it was over. They said the meme coin madness was done. But what if? What if they were wrong? What if, buried deep within the chaos, a rare, almost mythical pattern has just emerged, hinting at an explosion so powerful, it could leave those who doubted absolutely stunned. We're talking a potential 62% surge for one of the most talked about meme coins on the planet. The market is bleeding. Geopolitical tensions are simmering. And yet, right now, as fear grips the crypto world, a select few are quietly positioning themselves, seeing something the mainstream is missing, something that could be the catalyst for a monumental shift. And you, my friends, are about to see exactly what that is. Welcome back, crypto warriors, to the channel where we don't just scratch the surface, we dive into the deepest, darkest corners of the blockchain to unearth the truth. I'm your host, and today, we need to talk about Pepe coin. Now, I know what many of you are thinking. Pepe? Wasn't that the coin that had its moment? Isn't it just another casualty of this volatile market? And honestly, if you've been looking at the daily charts, you'd be forgiven for thinking that. Just yesterday, June 18th, Pepe tumbled another 3%, dropping to around $0.0000102. Traders are running for cover, abandoning risk assets faster than a politician abandons promises. It's a sea of red out there, folks. We've seen a pretty consistent downward trend since mid-May. The fear, uncertainty, and doubt, the FUD, is palpable. Geopolitical concerns are at an all-time high, creating a flight to safety, and meme coins, by their very nature, are considered high-risk, high-reward plays. So naturally, they're among the first to feel the squeeze. But here's where it gets interesting. And frankly, a little chilling. While the masses are panicking, while the daily noise screams doom, the smartest money, the informed money, is looking at something far more significant. They're looking at the bigger picture. And what they're seeing, well, it's a pattern that whispers of a massive rebound. A whisper that's quickly turning into a roar. And it's not just some speculative hopium. It's backed by cold, hard data. We're talking about a sudden, dramatic spike in open interest, a staggering $74 million jump in just the last couple of days alone. What does that tell you? It tells you that while retail is running, the big players, the futures traders, are quietly and very confidently placing their bets. Betting on what exactly? This is where we peel back the layers. This is where we expose the hidden truth. Because when you zoom out, when you step away from the daily noise and look at the weekly time frame for Pepe coin, something incredible, and frankly, quite rare, emerges. We're witnessing the classic formation of a bullish cup and handle pattern. For those of you new to technical analysis, think of it like this. The cup forms after a significant downtrend, a major cool-off period, which for Pepe started back in December and bottomed out around March. The price attempted a recovery in April, forming the first side of our cup, but it was rejected hard at the $0.000014 resistance level. This level is absolutely critical, acting as the neckline of our pattern. Now, here's the kicker. The rejection at that $0.000014 mark led directly to the formation of the handle. This handle is a smaller, downward-sloping parallel channel. It looks like a minor consolidation or pullback, but it's actually a crucial phase of this incredibly powerful bullish setup. So, what does this pattern tell us? It tells us that after a long period of decline and consolidation, buying pressure is quietly, steadily building. This pattern matures, it confirms, when Pepe coin price can first flip resistance at this descending parallel channel, essentially breaking out of the handle, and then, critically, rise above that $0.000014 neckline. If this happens, if we see that breakout, the textbook projection for a cup and handle is nothing short of a 62% rally. Let me repeat that, 62%. That would potentially propel Pepe coin all the way to $0.00000227. But wait, there's more. Because it's not just a pretty pattern on a chart. The underlying indicators are screaming confirmation. Take a look at the money flow index, MFI. While the price has been making lower lows within this handle, the MFI is doing the exact opposite. It's tipping north. This, my friends, is what we call bullish divergence. It's a powerful signal that even as the price dips, buying pressure is quietly accumulating, preparing for a massive move. And if that wasn't enough to get your adrenaline pumping, consider the Average Directional Index, ADX. The ADX measures the strength of a trend. And right now, it's showing a clear weakness in the downtrend that started back in May. What does that mean? It means the bears, the sellers, are losing their grip. They're exhausting themselves. And when the bears lose control, it paves the way for the buyers, the accumulators, to step in and send this price soaring. The pieces are aligning. The pattern, the MFI divergence, the weakening ADX, it's a confluence of bullish signals. And there's always a but in this game. There's a critical invalidation thesis we must address. Because in the world of crypto, nothing is guaranteed. A previous analysis by Coinglass highlighted a concerning trend. Pepe whales were exiting. Net flows dropped by a staggering 97%. If the largest holders, the whales, aren't willing to buy back in, even as the bears falter, it could push the price below the handle, completely invalidating this incredible cup and handle pattern. This is the ultimate risk. This is the knife edge we stand on. But here's why I believe the tide is turning. Here's why the odds are currently stacked in favor of that explosive 62% rally. Remember that sudden, massive jump in open interest I mentioned? Data from Coinglass is undeniable. In just 24 hours, open interest for Pepe futures skyrocketed by $74 million, hitting a total of $530 million. This isn't just noise, folks. This is futures traders, the professional speculators, piling into Pepe, betting on its future price performance, despite the current volatility. They are smelling blood in the water, bullish blood. And to drive the point home even further, let's look at the long/short ratio on OKX. It stands at a staggering 2.63. What does that mean? It means for every one short position, betting on price going down, there are nearly 3 long positions, betting on price going up. The sentiment among these leveraged traders is overwhelmingly, undeniably, bullish. They are confident. They are positioned. Now, some might point to the recent liquidations. Yes, in the last 24 hours, Pepe saw the highest liquidations among meme coins, reaching $4.19 million, with the 1,000 Pepe contract alone hitting $6.77 million. And yes, most of these were long positions, contributing to that 3% dip we saw. But understand this, these liquidations often act as the final shakeout. They clear out the weak hands, the overleveraged, allowing the market to reset and prepare for a sustained move. It's the market's way of cleaning house before the big push. So let's bring it all together. Yes, Pepe coin has been in a downtrend. Yes, the daily charts look grim. But an in-depth analysis of the higher time frame, the weekly chart, reveals a powerful cup and handle pattern, a rare bullish formation. This pattern is being supported by bullish divergences in the MFI, a weakening ADX, and, most critically, a massive, undeniable surge in open interest and an overwhelmingly bullish long/short ratio among futures traders. The stage is set. The pattern is forming. The smart money is positioning. We are at a critical juncture for Pepe coin. The question isn't if it will move, but when that breakout occurs. And when it does, the potential for a 62% rally is not just a dream, it's a very real, mathematically projected target. Keep your eyes glued to that $0.000014 neckline. Watch for the breakout from the handle. Because if Pepe coin confirms this pattern, we could be looking at one of the most explosive rallies of the year. Don't be caught off guard. Do your own research. Stay vigilant. And never forget, before we go, a crucial disclaimer. I am not a financial advisor. This video is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and inherently risky. You could lose some or all of your investment. Always conduct your own thorough research, consult with a qualified financial professional, and only invest what you can afford to lose. Past performance is not indicative of future results.